So, Jamie, how I'm thinking about what's going on now is I know the talk is tariffs. I know it's all about what's happening today, what happened yesterday, what did Trump announce? But I go back to the framework that I've been using, which is liquidity. And the liquidity has led this whole price action by 3 months so perfectly. It's been sort of insane. And, I'm just, Peter, I'm just going to share a chart. This is from Global Macro Investor, just to kick us off on how I'm looking at this. Now, this doesn't have today's price action, but again, price action in Bitcoin is actually not that bad today. Not like the Nasdaq's getting nuked, and I'll talk about the Nasdaq in a sec as well. So, global M2 versus Bitcoin, either a 10-week lead or a 12-week lead, doesn't really matter. But basically, should be the bottoming zone. What is happening here is there's a reaction to the Trump headlines, yes, of course, but a lot of this was baked in the cake because of liquidity tightening by the rising dollar and rising rates last year. Now, you can see from the black line, which is forward looking 10 weeks, and this doesn't take into account the current move in the dollar and rates and oil, is actually financial conditions are easing really, really fast. The NASDAQ is all the same as well. You can see from the chart here, we're kind of in the bottoming zone. Forward, we've got global M2, and the financial conditions index is screaming higher, whilst the economic surprises index of how the economic activity is versus expectation should start raising too. So the growth shock has largely been put in the price. I think I've got somewhere here some of the charts of the growth shock itself. I'm just trying to flick through. So yes, that's the financial conditions index. Bitcoin, 3-month percentage rate of change, has actually priced in all of the tightening of financial conditions and should very soon start pricing in the other side, which is this financial conditions easing. Now, this will be much higher again because of the last few days. So for me, it's kind of expected. The last time you came on, Jamie, was pretty much at the tail end of a panic back in September last year. At the end of that god-awful range, nobody believed we'd ever get out of it. You came on and said, I think we're all going to be fine. I was of the same, and it all figured out. So lay it on me. Where are you in this?
Yeah, well, I mean, we both have our own hypothesis about what drives markets, and then we build frameworks around it. And obviously, your framework has informed a lot of what I do and how I think as well. But I created my specific macro framework based on the inputs that I saw and backtesting. And you build these, personally, I build these frameworks because I'm trying to eliminate a lot of the subjective bias that creeps in when you're investing to try and reduce errors. And my models are also saying that financial conditions as of starting in February and then accelerating into March, mid-March, all started to pick up and gave me the signal that Bitcoin should do very well over the next, over the foreseeable future, 3 months, 6 months, 12 months.
Yeah.
I couldn't predict what the Trump administration was going to do with tariffs, especially that formula that they've applied. I think that has caught everyone by surprise, even those that expected Trump to perhaps surprise on the upside.
Get ready for some electrifying news shaking up the stock market world. Brace yourself as we dive into the latest buzz surrounding Bitcoin and its tumultuous journey throughout April. Ki-Young-Ju, the CEO of CryptoQuant, has sounded the alarm bells with insights that are sure to keep you on the edge of your seat. The dynamics of this crypto giant are about to be unveiled, leaving us all mesmerized by the frenzy of market movements and trends. Welcome back to Investocracy Crypto.
What's interesting is that Bitcoin, it's 3 times the vol of the S&P, maybe about 2 times Nasdaq or 2.5 times Nasdaq. The price action over the last week and a half, maybe even longer, has been surprising given the moves that we've seen in other risk assets. So, of course, if things crater, if something else happens, if there is a geopolitical blow-up, or if there is other things which we can't foresee, then all bets are off. But that just accelerates, again, the response that will be required from central banks. So it's like I describe it as investing in Bitcoin specifically, not just crypto, but like Bitcoin is like playing chicken with central banks.
Yes.
Because you know what they know and they will need to do something sooner or later. And so it's whether you can stomach the volatility that comes with this asset on the way to the overall trajectory, which is liquidity up.
And, that just so people are aware, financial conditions, different people measure it different ways, but one of the easiest ways is, an amalgamation of rates, the dollar, and some commodity prices, input prices. And we've seen a massive move in oil. We've seen a massive move in rates. They formed a nice head and shoulders top. Looks like, we should see rates back down at 3.5% in 10 years. And we've seen an enormous move in the dollar as well. It's a gigantic move in the dollar. And the dollar is the big daddy of all liquidity measures because everybody's in debt dollars. And I said this from the beginning is like China needs a weaker dollar. They will agree tariffs in the end, whatever the negotiation is. They'll agree something because they need the weaker dollar because they need to roll their dollar debts. Everybody needs to export goods, and you need a weak dollar to have a stronger global economy. The US needs to export stuff. Everybody wants a weaker dollar, and the weaker dollar is the biggest stimulus you can get. So it kind of is all, for me, it's like it's setting up. And now it's about technicals and on-chain stuff and just trying to nail the timing because we've both identified it's like next 3 months for sure higher. There'll be consolidations next 6 months, probably next 12 months. That's kind of how it feels, pretty certain. Now, the question is whether it's next month higher, which I actually think, we probably end up, higher within 2 weeks' time than we are today.
In a realm where numbers dance and fortunes sway, Bitcoin's recent plunge to a 3-week low of 77,077 has tongues wagging and keyboards clattering. Ki Young-ju, the seasoned captain navigating the crypto seas, hints at stormy weather ahead. But fear not, in this roller coaster of finance, there's always room for a bit of humor. Remember, even the stock charts could use a good laugh. As we dissect the intricate web of on-chain data and market behaviors, one thing is clear. The tides are turning and the bears are awakening. The divergence between the market cap and the realized cap paints a vivid picture of uncertainty in the crypto cosmos. The seasoned predictor Ju foresees a prolonged bearish stretch, whispering tales of a 6-month haze hovering over Bitcoin's future.
When I looked at the DXY back a couple of weeks ago and saw that massive move down, which was a 3-day consecutive move of more than 2.5%, which was in fact like a 2.5 standard deviation, 3 standard deviation event. Every single time that had happened in the past, over the next 90 days, Bitcoin was higher and substantially higher. I've actually got a chart around that as well.
Yeah.
So I might just bring that up. But so you can see that on your screen now. So this is just the Bitcoin chart with these large DXY moves that occur over time. And the subchart is just showing you the percentage change. But when you look at what happens over the following 90 days, and there's only been 8 of these in the last sort of 12 years. So sample size is relatively small. So take of that what you will, statistical significance, from a purist standpoint might not be there, but at least we've got over 12 years, 8 occurrences every single time Bitcoin is up substantially. And this yellow line here is just the average of all of those 8 instances. Now we can see where we are today. We're right at the bottom. This is the worst performance post that signal of the previous 8 signals that we've seen over the last 12 years, but pretty much in line with what happened in 2015. On average, though, Bitcoin is up 37% 90 days later, and 1 standard deviation move above that is 63%. So that really brings us towards 120, 130,000. If it's just an average move, and if it's something more, then, it's actually probably about 110, 115,000. But if it's a 1 standard deviation move,
but new highs.
Yeah, it's new highs. And so that was giving me a lot of, confidence when we started to see that big dollar move 2 or 3 weeks ago. But since then, it's actually depreciated a lot more. So I think that that really does set up for a strong move. Now, the problem that we have just in the short term, Raoul, I think, is around tax loss or tax season in the United States. And if anyone's looking at their crypto portfolio right now and they've bought in the last 6 months, they're on tax losses. So they might actually dampen things down. The other, I guess, counterpoint to that is I think FTX reimbursements are starting to flow or will be flowing very soon. So how that gets recycled back into the market will be very, very interesting. I think Bitcoin will catch a bid first with people who get some sort of recovery money from FTX.
In a world rattled by the echoes of Trump's tariffs, Bitcoin finds its sanctuary questioned amidst the volatile global climate. Yet amidst the chaos, there's a symphony of data to decipher, hinting at the enigmatic nature of this financial giant. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Sort of my favorite chart is just looking at the global liquidity, the total global liquidity, which is slightly different to yours. But the interesting thing here, if we just look at the last couple of days, is that we are very close to breaking out of a contraction in total global liquidity, which is obviously an aggregation of...
I mean, that's a beautiful kind of wedge pattern, right? I mean, that's...
It is, and we've seen it happen, you know, on several occasions before. So this drawdown in, I mean, if you can call it a drawdown, like global liquidity, when global liquidity contracts, at least in Bitcoin's history since sort of 2009, the contractions have only been about 5%, and they've lasted 2 years, at least on the previous two examples. This time around, it was 10%, and we're still in the consolidation or wedge pattern, and it's 3 years. So it's been deeper and longer than previous times. And so, you know, just from technical analysis, you know, when you get a wedge pattern that's even larger and goes on for longer, usually the breakout is even stronger. So, and we know that this is an upward moving chart. It has to, because essentially it's the only way the financial system can stay afloat.
And so total global liquidity means that a lot of it's going to be driven by the dollar, which is now trending lower. And if it breaks kind of the 100 level, it can move down to, in DXY, it can break, you know, it can move down to 90 or so, which would be, you know, a good cyclical dollar bear market in a structural dollar bull. Then we've got the central banks and others, and that's driven probably by China, the US, and others, I'm guessing, you know, using other liquidity measures within that. So, you know, China's probably the big one in that. But yeah, well, that's your global money supply.
As we draw the curtains on this gripping tale of Bitcoin's trials and tribulations, one question looms large. To invest or not to invest? The whispers of growth and forecasts echo in the winds, beckoning the daring souls to take a leap of faith into the realm of cryptocurrencies. The current landscape portrays a canvas of opportunity, waiting for the bold and the brave to seize the day. So, dear reader, as we bid adieu to this whirlwind of speculation and data, we invite you to join the conversation. Share your thoughts, unveil your musings, and let's embark on this thrilling journey through the ever-fluctuating world of stocks and digital havens. But what do you think? Share your thoughts down below. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.